Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, October 18th. This is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you personal financial advice. Please do your own due diligence. It's your money. It's your responsibility. Okay, so it looks like gold finally had a pause. It's pulled back, I wouldn't say significantly, but it's not going up straight like it has been for the last 2 months, basically. And of course, I was saying that it probably needs a rest. So who knows if this is it, right? Maybe, again, let me qualify this. I have no particular insight into what's going to happen into the future. No one does. No one knows what's going to happen. So what I try to do is look at sentiment, psychology, what people are saying, where the money flows going, and market action. And nothing goes straight up. You can put all the fundamentals you want. This is interesting because when I say stuff like a couple weeks ago, I kind of said that this was getting frothy, and I didn't mean that you should go out and sell all your gold. What I was saying is you need to be careful. If you're entering the market at the top, that's usually or at an intermediate top, which I believe this is what we're kind of at. We need a rest. Then if gold and these commodities and these resource stocks are very volatile. And when I say they're volatile, they can go up or down 30 or 50% within a year. You can look at the 52-week high and low of these things and see, everybody's happy when things go up, obviously. That goes without saying, right? But when things go down, people get upset. And so, of course, a lot of people come at me. That's just one of the sentiment indicators I use, telling me what I already know. Yeah, I know that we have record deficits. I know that we have record money creation. I know that there's no fiscal responsibility. I've been talking about this for 7 or 8 years on the internet. It doesn't mean things go straight up. 2 years ago, you couldn't get anybody to buy gold. No one cared about it. Remember? Now everybody's a gold buyer. In fact, one of the top sentiment things that I learned during the last gold bull market was something similar when we had people standing in line at bullion dealers, standing in line on the street to buy gold bullion, gold and silver bullion. That was a top. That happened to be the all-time top to that point, but that is indication of a top. I'm sorry to tell you this. Retail investors are not the vanguard. They're not the smart money. Okay. After we had a 60% move in gold this year, 60% over the last year, now all of a sudden the shoe clerks and bleacher bums show up and are standing in line on the street by a tenth ounce gold eagle, whatever they're doing. Look, I'm not here to bash people, but these are sentiment indicators. Okay. As Gordon Gekko said in Wall Street, I was watching it the other day, a fool and his money, how did they get together in the first place? And so people take that the wrong way. Because if you were standing in line last week buying bullion, you're the sucker at the table. Now, I think gold, for the record, gold and silver and other precious metals and commodities are going to go higher over time. And there's a reason why I've said that. It's not going to be straight up. There are going to be pullbacks. There are going to be consolidations. These things are going to disappoint people. As I've said over and over, if you're a long-term listener, you know this, whether it's uranium, whether it's oil stocks, whatever it is, when retail shows up in mass, that usually is an indication of very, a top. Whether it's the all-time top, whether it's an intermediate top, it's a top. We've seen it in uranium. If you've been a uranium investor and follow FinTwit on Twitter, Uranium Twit, whatever you want to call it. This is just classic behavior. I had somebody send me an email or a DM. Well, they're not standing in line in the US, so it's not the top. I'm not saying it's the top. I have no particular insight. I'm not a fortune teller, but I know when, if it's in Hong Kong and in China and in Vietnam and in Australia, something's happening. Yes, people should be protecting themselves against the debasement of these fiat currencies. I've said that since day one, since I've been on the internet, since I've been an investor. Gold is money. It's savings. It protects you against government malfeasance and central bank irresponsibility. We've talked about this, but there are times to buy and there's times to hold back. The mantra, the goal, the mission statement of actionable intelligence is to sell overvalued things and buy undervalued things. If that upsets you or makes you mad because it's not validating your presuppositions or what you want to happen, that's your issue, not my issue. I've crushed the S&P. The newsletter has crushed the S&P over since the last 5 years. It could be luck. What I don't do is buy things that are the flavor of the month when everybody else is buying them. That's not typically a record for success. Now, that doesn't mean that gold's topped. It doesn't mean sell your gold. It doesn't mean I'm against gold, for the record. I have no idea what it will do. It may go up another $100 on Monday. Who knows what's going to happen? Okay. I think it's going substantially higher over the next 3 to 5 to 10 years, over $10,000 an ounce. But it's not going to be a straight line. It's not going to be a straight line. And so if you have capital and you want to get in because you didn't get in before, because you didn't understand gold was money and you weren't buying it at $250 an ounce like I was, or $400 an ounce, or $1,000 an ounce, or $1,800 an ounce, and all of a sudden now you want to buy it when it's $4,200 an ounce and everybody's standing in line, that's something you probably need to take a look at if that's how you think about things. Why are you buying gold today? Why are you standing in line on the high street in your downtown central business district, standing in line on your lunch hour buying gold? Are you savvy? Are you the inside money? Think about it. So, gold is now the best performing major asset class over the last 20 years. It's averaged 11% a year. It's beaten the US market. Okay. So you can see the year to date here. You can see the last 3 years, what it's done. These are the average returns per year, by the way, 11%, 13% over the last 10 years. And this is the reason why, because of the tremendous amount of money creation. It doesn't necessarily mean gold went up. It means purchasing power of your dollar has went down. That's what it's really reflecting. And so it goes through periods of where no one cares about it, calls it a doorstop, and periods where, because it's in the media and social media and everybody's gotten a frenzy, then it can get overbought. It can get undervalued, and it can get oversold, and it can get overbought. This is what happens. It's a commodity. It's volatile. But this is interesting. This should be telling you something, what's really happening. You have to understand why gold's been the best performing asset class over the last 20 years to understand gold. Gold has moved from 4% to 6% of global investable assets. So, yeah, we've been talking about this. Why is that happening? Why are bonds going down? Because the major economies in the world are bankrupt and can't pay their debts and are going to continue to issue more and more bonds, more script to try to keep their bankrupt economies and social welfare and pension plans running. We've talked about it. And so gold is going to, you see, as bonds have declined as a share of global investment. Who wants to hold a certificate of confiscation? Who's buying a long-term bond? You even have major investment houses. I forget which one it was, Morgan Stanley or Goldman Sachs. I can't remember. One of them came out and said the typical or the 60/40 stock bond allocation that's worked so well for the last 30 or 40 years since we've been in this long-term decline in interest rates no longer works. That's right, because interest rates are going to be moving higher over time. Well, at least until the central banks initiate yield curve control because they can't allow rates, but that's a whole nother story. And so people are saying, well, maybe not 60/40, but 60/20 bonds and another 20% in precious metals. A major investment bank said that. Or was it? I may have been 60/40 into gold. I don't remember, but it was a major allocation to gold. Again, I've pointed this out ad nauseum over the years. So here are the central banks that have really been driving this gold rally. Now retail's starting to come in, but China and Russia. Why are China and Russia buying gold? Why have they been buying a lot of gold since 2000? Why aren't they buying U.S. treasuries? You see India also, Turkey, even Japan. The reason what we've talked about, I'm not going to talk about it. Look who the sellers are. Germany, France, Switzerland, even the US to a certain extent. I mean, he who owns the gold makes the rules, and these Western economies have done nothing. These G7 countries, the United States included, have done nothing to endear themselves to the people that they need to buy their bonds. As a matter of fact, they've done the exact opposite, confiscated Russian assets. Last week, we had a situation where the United States had its vassal, the Netherlands, confiscate a Chinese tech company in the Netherlands that employs 12,000 people, who happens to supply chips to the entire EU automotive industry because, China bad. Orange Man said China bad. So if you're going to forcing the sale of TikTok, this is only going to work for so long, folks. And people are saying, okay, well, you want to have a new Cold War, you want to have a cold World War III. Okay, well, we're going to divest ourselves of your currency. President Trump has even said that. We're going to punish countries that try to move away from the dollar. We've killed leaders, we've invaded countries because of this. Libya, Iraq, not just for those reasons, but other reasons. But so why, if you're in the crosshairs of the US government, whether it's Biden, whether it's Obama, whether it's Trump, whether it's Bush, it doesn't matter. It's all the same. Why are you going to hold US Treasuries? Why are you going to try to do the most you can to divest yourself of US dollars? And so gold ends up being that reserve asset. Where else are you going to go? Russia's not going to buy Chinese yuan if they can help it. And China's not, if you're a high net worth individual, you don't go fly to Moscow or St. Petersburg and talk to a, person about storing your wealth in Russia. That's just not how things are done. These people do not trust each other, but they certainly, the enemy of my enemy is my friend. In the US is that cave troll in the Lord of the Rings flailing about as it, trying to, whack everybody. So people are like, I'm getting away from this. I'm not dealing with this. And so they're going to divest. Maybe not fully. The dollar's not going to disappear. I'm not one of these quacks that gets on and talks about the dollar collapsing every day. And then eventually, when it goes down a little bit, I'm so-called vindicated. But this is what's happening. This is why gold is being accumulated by central banks as a reserve asset. So this is the fourth best year for gold in history. You can see the dates. Here's 2025 right here. Here it's 1979, the blow off, which was the previous top. nominal top back in 1979. We had another good year in 73. These were all years of high inflation. This is where we're entering again. I'm not saying we're going to enter 60s or 70s inflation, but at some point, as the debts increase at $2 trillion a year, $1.5 trillion, $2 trillion a year, you're at 37. I think you cracked 38 trillion. You're going to be in another year, $40 trillion in debt. I'll remind people what Felix Zulauf said. So about the debts and about the Fed's and eventual size of the Fed's balance sheet. They're going to have to monetize the debt eventually. So this was up until last week. It says, again, I like to play probabilities. I like to look at history. I like to look at what has happened in the past as a possible guide to what can happen in the future. Now, these are not 100% certain. Let me qualify that. This isn't 100%. We cannot know the future with any certainty. We can just look at probabilities. What's probable in the context of the information we have currently, which is subject to change as new information comes in. But this is interesting. It says gold has never gone up 10 weeks in a row. So these are the times, 1, 2, 3, 4, 5, 4 previous times that gold was up 9 weeks in a row. If an asset class is up 9 weeks in a row, it's probably become overbought. This is what happened with gold the last 4 times it was up 9 weeks in a row. You can see that we had within a month or even 2 months later, we had declines in all cases, anywhere from 2.5% to 32%. So I would suggest to you that probabilities are that we have entered at least an intermediate top, that we are going to pull back. Now, I may be wrong. I'm not saying we're going to pull back. I'm not saying we're not going to go higher. It's unknowable. But I'm just showing you the probabilities that you should take this into consideration when you're standing in line to buy bullion at all-time highs. You may have an opportunity to buy cheaper. You should have been buying a little bit every month or every year for the last 20 years since you've been having any money. But people don't do that. They didn't see the utility in doing that. The only time they get involved in assets, I'm talking about retail investors, is when the FOMO kicks in, when they have validation from the herd and the crowd. That's not how real wealth is created. This is why it's so difficult to get through to people and to make real money. Okay. And it took me a long time to learn this. And I finally learned it. I got control of my emotions. You have to buy things when they're out of favor, when no one wants them. That's where the value is. If you wait for validation from the herd so that your stomach isn't turning, this is why most people are not successful in the markets long term. Yes, they get occasionally lucky and hit something. I used to be that person. Okay. You have to buy things when they're undervalued. That's the key. This is a good illustration. This is the normie mindset, the MPC mindset, the retail investor. At $1,800 gold, every time I would talk about gold, nobody would watch the videos back when gold was 1,800, except for the gold bugs, who are always bullish on gold. Now at 4,200, again, people are standing in line. You can put uranium on here, you can put oil on here, you can put tech stocks on here, you can put whatever you want on here. It's the same thing. Same psychology applies, same sediment rules apply. It's always the same. If you understand that, you cannot help but become wealthy over time. This is a tortoise and hare race. The tortoise wins. You persevere and have patience. It's like Charlie Munger said. He had no doubt that him and Warren would become billionaires because they had the patience. As long as they didn't get sick and die of cancer or something, that having a good plan and being patient, and that's what has worked for me. Buying things that are out of favor, that are perceived to have little or no value or not have value in the near term, and then a perception change. Boom, then I get paid. That's how it's done. So here's the market value of U.S. official gold as a percent of foreign held United States treasuries. This is why gold, I think we've really just, this is why I think it moves higher over time, of course, with fits and starts. Even during that blow off that I showed you in 1979, during that blow off top when gold went to $800 and change, it had a 50% drop during that period when it moved, made that final move. It had um, that move from from where it was making that high. There was a 50% drop in it. That's what people don't realize. And I'm not suggesting we're going to have a 50% drop. I have no idea what will happen. It wouldn't be unprecedented to have a 20 or 30% pullback. I have no idea what the catalyst would be for that. Or it could keep running. It could double from here over the next year. Anything's possible. But I'm just saying, you have to be cognizant of this at least. So what looks cheapest relative to gold? Well, certainly not Bitcoin or the S&P. So commodities, interestingly enough, the FTSE 100. Would I go there now? No, but I'm going through those companies because eventually there's going to be a change in the government in the UK that's, I believe, is going to be more market friendly. And that may lead, if that happens, see, if X happens, then Y may happen, then Z getting paid might happen. So if reform at some point takes over, if they reopen the North Sea, if they clamp down on immigration, if they cut taxes and spending, if. So this is why you have to look at these things. Raw industrials, Euro stocks, same thing. Would I touch Euro stocks right now? No, because there's a political crisis going on in the EU. But it's worth looking at. What am I invested in? Emerging markets and oil. Yes, I still have gold bullion. Yes, I still have a gold stock in the AIA portfolio. I will probably be looking to add a couple of silver stocks that I have been watching that ran away from me. I will look at probably possibly re-entering them, but I need to see what happens in the market action. But silver, copper, the main standouts that are not cheap relative to gold are the S&P. So what's likely to go up over time and what's likely to go down? I would suggest to you that EMs, oil, and commodities will do well relative to the S&P and Bitcoin as priced in gold because gold's real money. Now people will poo-poo this and say these are typically the people though that benefit from the stock market going up or Bitcoin going up or have something, some Wall Street money manager. Well, that doesn't make sense to price things in gold. Things are not relative. They absolutely are relative. But, that's why I don't have television here. I don't watch CNBC unless it's on at the gym. And I pay very little attention to what these people say. That's what's cheap. Yes, I have a whole bunch of companies I would like to buy, but I need to see a catalyst. Okay. They're not scheduled to have elections there for a while. And so things can get worse. I actually have a company that I am invested in that's in the UK, that's on the FTSE, that deals with bankruptcy workouts because there's a tremendous amount of bankruptcies in the UK right now because it's, government policy is driving the economy into the ground. So here's a chart. We're familiar with these charts. I just like showing them to remind folks. U.S. nuclear generators import nearly all the uranium concentrate they use. This administration is trying to fix that. This is going to be, again, billions of dollars in years. And again, this is going to create opportunity. So that doesn't mean just go out and buy random junior uranium stocks. There's a whole industry. A lot of those stocks have moved already, though. And so it becomes increasingly difficult to put together a portfolio that would benefit from this. And so you have to pick your spots. You have to do some research. You can't just go out and buy junior mining companies that have no uh, production and have no. I think there's something like probably 125 uranium companies that claim that they're uranium mining companies. Maybe 10 of those or 12 of those are investable. So, and you know the ones that are producing right now, so which is about four or five. And so what are the other ones? Okay. Probably stick to the Athabasca area in Canada. But people like their penny dreadfuls. They like their lottery tickets. I do too, occasionally. But there's more to the nuclear industry, just like the same thing I say about the oil industry. There are still companies, there's still, Valaris, for example, the offshore driller. People will tell me there's no money to be made. I mean, the thing's going to cash flow like 300 or $400 million this year. They're buying back stock. There's all kinds of companies, okay? And this is at $60 a barrel Brent. So if you think oil's going to 40 and going to stay there, yeah, these companies will probably, you know, not do well. I don't think that. The sentiment is so bad now in the oil stocks. It's unbelievable in my mind. Does that mean they go up next week? Uh, Probably not. What's going to happen over the next 3 to 5 years? Energy demand is going to increase. Demand for oil is going to increase. Demand for natural gas is going to increase. Where are you going to get all this stuff? So here's one of those charts that some people don't like to look at, commodities versus gold. Gold's taken off and went basically at a 60-degree angle. Commodities haven't moved. You see over time, at least as far back as this chart goes to 1995, they usually track fairly closely. So I think other commodities, have the opportunity to move higher, and I think they will. I think copper's tremendous over the next decade. There just simply hasn't been enough investment. And if you want to go through and look at, what's happened in Panama with the mine there being shut down from politics, with the issues at Grasberg, with the issues in Africa with the mine there, that's like 7 to 8% of world demand offline. If you took 7 or 8% of world oil offline, the oil price would probably double within a week. And here we have issues with copper mines that were supposed to fill this void. Copper was already struggling to meet demand. Most major analysts think it's going to be in deficit going forward. No one even talks about the agricultural commodities. I'm looking at that right now. One of your main potash exporters was in Belarus and in Russia. We're not allowed to buy this stuff anymore. Where's the stuff coming from? Look at the price of these commodities. Have they moved higher? Who are the producers? Uh, Look at nickel. It's in the dumpster. I'm not saying go out and run and buy these companies, but no one's talking about these things. Okay. So there are always things that no one's talking about that you should be looking at if you're a real investor. If you're just a gambler and a speculator is a person, I have no problem with being a speculator as long as you know you're speculating. If you want to buy something because it's already high and you think it's going to move higher based on charts or your inclination or your gut, that's a speculation. That's fine. I like to I like investments. Things I can buy that are relatively cheap to everything else, yet have a catalyst or I have a view that they're going to have a perception change based on supply, demand, what have you. This is the kind of stuff that I look at and take notice of. Interesting. And you'll notice these things play out over years. It doesn't see, that's the problem. Everybody wants to get rich quick, especially people that are younger, because we've created this casino mentality because you can't, the American dream is slowly slipping away. So people they got to get out there and hustle. I got to hustle. This is why online gambling and all this stuff has taken off because people are looking to get out there and I got to get my bag. I got to get something going. I got to hustle. I got to make some money. You got to my view is you got to put together a bankroll and do what has always worked. Looking at things as an investor and looking at things long term. You know, not recently, probably in the last couple of years since I retired, I've had so much more time. I wish I would have done this a long time ago. I have these relatively nice portfolios, especially some retirement portfolios that have a lot of high paying dividend stocks in them. And I was content while I was working just to collect the dividends and, you know, roll up, buy more shares. Okay. Now I'm thinking to myself, I can, after I started like investigating this deeply, I can really create a business here and a flywheel. Not only do I get the dividends, what has underperformed? What's my portfolio look like? Where do I take those dividends? I don't need the retirement, the capital right now, pay for my living expenses. So what do? I'm getting tax-free cash right now, or tax deferred. Okay. That's what it is, tax deferred. And I'm buying more undervalued securities. And now I'm selling options, strategically selling options, both covered calls and puts on stocks that I would like to buy at a lower price, getting that immediate premium and then rolling it. Most of the options that I do sell end up going, let's say 75 to 80% of them expire worthless for the people that are buying them from me. I like being the house. The casino always wins. And if people want to get in there and speculate by buying options, I'm happy to sell them. And that creates an additional flywheel. That's more cash flow coming in to buy more companies, to buy more around lots of companies I already like, to write more options. It starts compounding. I wish I would have known this and thought about this more deeply, and I would have retired even earlier and ran this business. It's a one-man business. I don't have any employees. It's relatively easy. It doesn't take all day. I'm not sitting in front of a computer trying to trade and speculate and, you know, flip a stock for $1 here or 50 cents there. And there are plenty of videos out there. There's plenty of people doing this, making tremendous amounts of money. And at first you're like, okay, this isn't really a big deal, but it's still, cash. Then you can see the compounding effect. And you see, oh my goodness, even if the stock market drops, most of these companies, the last thing a company management wants to do in a board of directors, if they are an established dividend player, is have to cut the dividend. Even during recessions, even during pullbacks, like in the oil industry, one of the companies will stop buying back shares. They'll cut back on capex. The last thing they want to do is cut that dividend. So a company really has to be in dire straits to cut their dividend, and you should be able to understand that. And so you look at these dividend aristocrats, these dividend payers long term. Again, this is the turtle way to do it. Plodding along, doing the same thing, one foot in front of the other, and then you're like, wow, this is actually, creating a flywheel, a snowball rolling downhill, getting bigger and bigger. Everybody should be doing this, but very few do. So this is interesting. I've been looking at this and I'm like, okay, LNG export capacity poised to double by 2029. Do all of these things get built? These US and Canadian LNG? And I look at the US, North America LNG, particularly in the US, do we have enough gas to supply all of this? Well, I guess we're going to find out. But we do know that we have substandard pipeline capacity. I mean, I'm looking at a pipeline company right now, bunch of pipeline companies that are doing expansions that, they're not growing at 100% a year because they're in the tech industry, but they're plodding along at 6 to 8 to 10% a year in EBITDA growth, cash flow growth, and they're paying dividends. And it doesn't matter what the commodity price is. And I found one that's down about 40, 35 or 40%. It's a multi-billion dollar company. It's out of favor right now. I'm looking at it. It's paying about a 6% dividend. I'm like, what's wrong with this company? Why shouldn't I be buying this and adding it to the dividend portfolio? And so I'm thinking, where is all this gas going to come from and who's going to transport it? Notwithstanding the fact that we have this AI power drought, all of these companies wanting power, more power, I need more power, power all these data centers, whether or not that will happen, but that's what they're saying. And so we have the gas turbine suppliers sold out. So we have all this tremendous surge in gas turbine electricity production coming. It's already coming. Electricity prices are ramping as we speak. And so that is gas demand. And so I'm thinking to myself, you know, wow, that's an opportunity. You don't necessarily have to go out and buy the gas producers. One of the things I've said before is people will ask me on these interviews where I'm interviewed, what do you think about natural gas? I don't invest in it because it's too hard. I've never really made money on it. But then I'm thinking, okay, well, I can own the toll roads that transport the gas. It doesn't matter if the price is $1 or $4 an MCF. They get paid regardless. Now, again, it's not sexy. It's not cool. It's not something you go out and brag about and anybody cares about. People's eyes kind of just glass over when you start talking about it. But there you go. It's the turtle again. So I hear President Trump, he's focused on oil prices because Joe Sixpack and MAGA people focus on prices of gas, beef, egg, rent, things like this, obvious things. But energy is more than lower oil prices, and he's put all the stops. Iran has record production going on. He's trying to, using the Don Road doctrine, have a regime change in Venezuela so that we can get control of those oil assets, send Chevron and everybody in there and ramp that oil industry back up and flood the world with more oil, bailing out Argentina, you know, anything to get oil prices down. I think MBS is coming to the White House. So the world obviously is awash in oil now, but he doesn't seem to understand that lowering oil prices is actually bad for U.S. oil production in the long term. As many things is he doesn't understand a lot. He just runs on gut feelings. I give him credit for being a consummate populist politician. He has his fingers on the pulse, but he doesn't understand how the circulatory system works. But he doesn't care because he knows how to uh, weave that. He also knows his audience isn't that sophisticated either. As gas prices go down, they're happy. If they go up in 3 years because there's been no investment because of the lower oil prices, well, that's somebody else's problem, or I'll deal with it then. But this is a real problem. This goes back to that thing about LNG. If you're going to double LNG exports from the US and you're going to try to build all these gas turbine electrical plants to deal with this surge in electrical demand, which is causing prices to go up, this is going to probably be an issue. And this is going to be a political issue. This is already becoming a political issue, as I've said before. And so this is why nuclear long term is a solution, but that's 10, 15, 20-year plan. There's no nuclear plants under construction in the US. I think, yeah, okay, one or two demonstration SMR plants. No big time build out of nuclear like in China or these other countries. It's not happening in the US. It needs to happen. I hope it will happen. But in the interim, gas turbines are the solution. And people are going to start pushing back at the ballot box over these high electricity prices. I mean, they're up 30%, average electricity price, 14 cents a kilowatt hour. to, over 18, 19, almost 20 cents. People are not going to put up with it. And so this is why you see Siemens, Mitsubishi Heavy Industries, GE having record gas turbine sales because people are going, okay, well, if I want to have this data center and not have the local politicians shut me down, I need to build out this infrastructure. So I wanted to point this out. Gold miner earnings should start coming out in the next week or two. They're going to be tremendous. I mean, you have all-in sustaining costs of whether depending on the company, just say the average is around what between $1,600 and $1,800 an ounce, and the gold price is 4,200. So you have a $2,400 margin. They're going to have record cash flows, notwithstanding the fact that a lot of these companies, if they have open pits, for example, have high costs. A lot of their cost is based on diesel, which with the lower oil prices, their costs are very low. So they're in the best position they've ever been in. And so these cash flows are going to be blowing people's minds. This is why I think it's going to be prudent if we do have a pullback in gold and some of these things pull back to buy them because the earnings potential for a lot of these companies is under appreciated. I've seen analysts say that a lot of the gold companies are still priced for somewhere around 3,000 or 3,200 gold, and we're $1,000 an ounce higher. And so every day that goes by, the cash flows are expanding. And as long as they don't do stupid things like they've done in the past, go out and spend a bunch of money on, you know, stupid acquisitions or marginal uh, production, then this should continue. But this is an anomaly where you have gold up and oil down. This is a very important chart in my view. So you see, uh, this is anomalous. Will it continue? I don't know. But where you have gold up so much and oil down, this is uh, never been seen before. This anomaly. So combo of big gold gain plus big oil loss equals historical anomaly, and I would add here equals record mind-blowing cash flows for gold miners. I mean, if you own Newmont, if you own Agnico Eagle, if you own Anglo Gold, if you own the royalty companies, you are going to be looking at some really fun. I'm really going to enjoy over the next month listening to a lot of these conference calls. They're going to be awesome. And I think the shares will rocket on this news. More money is going to come into this. Now, again, depends on what happens to the gold price. If the gold price pulls back 10 or 20%, I'm not saying it will, then of course the shares are going to get rocked. But I think gold's moving higher over time. So I think a lot of these companies are going to be enjoying they're already starting, they have re-rated. And as you've seen, as I said would happen, a lot of the interest is moving down into the smaller companies. So we'll see what happens. Oil's not going away. People keep telling me it's going away. Demand for commercial aircraft. You have between now and 2044 an estimate of 43,000 passenger and freighter aircraft. So you have, uh, this is the amount of aircraft you have as of last year. And in 20 years, you need to replace 18,000 aircraft and there'll be 24,000 new aircraft. Okay. So a grand total of 43,000 aircraft. So you're basically going to almost double the amount of commercial aircraft. I'm talking about large, 737, 777s, Airbuses, all that stuff. That's what I'm talking about. I pointed out I had an investment in a company that had I think it was the second or third largest airport in India. And I didn't like the way that the management company that was running it structured it, where they basically creamed off a lot of the profits for themselves. But that's why I sold it. But the interesting thing I noticed was you look at a country like India at the time, this was a couple of years ago, And in a country of 1.4 billion people, now I know this has changed since then, but in a country of 1.4 billion people, there were only 800 commercial aircraft. So a country of 1.4 billion people had the same amount of aircraft as Southwest Airlines in the US. And so I thought to myself, yeah, that's a growth industry. And so if you look at like Boeing, if you look at Airbus, their order books, Boeing got screwed up because, as again, it was financially engineered by the Jack Welch fan club of management that was in there for a while and got away from its engineering route. This is something I've pointed out before. When you move away from companies that are technically capable with engineering talent and you let lawyers and accountants and MBAs run things, all they care about is they're looking at spreadsheets, cut costs, streamline. This is why you had the safety anomalies. Well, Boeing has changed its management, and it looks like it's slowly turning around. That doesn't mean I'm not necessarily interested in the company. I'm just pointing that out. But I am pointing out another thing. These things aren't going to run on batteries. I'll tell you that right now. Even if you could get the battery technology, would you get on a plane with all of these cars that catch on fire, electric cars? I saw another one the other day. I think it was in China. Electric car caught on fire. The doors locked. The car, for some anomalous reason, when these things catch on fire, the doors lock and then the person's incinerated inside the car. So do you want to be at 40,000 feet and have the battery start? I mean, it's not viable technically right now, but it's not going to happen. And so jet fuel demand is going to increase over time. That's going to be, you know, oil's going to be in demand. It's not going away. It's just another example. So I wanted to point this out. Uh, Again, I got rid of the reality check on Rumble. People have asked me about it. It wasn't a lot of people watching it. It was a lot of work. It made me have to review and get into a bunch of stuff that is not really good for my mental and spiritual state. I don't want to be negative all the time, but I do occasionally come across things that I think are interesting. So I'll put them on here, these clown world things. My major issue during the last election was immigration. It affects so many things. And here's another example. Here's the FHA loan locks to immigrants without permanent residency, including H-1B visa holders. So these people, a loan lock is where the FHA, I think, guarantees your rate for a certain amount of time until you close the house. Um, this is interesting. Up until 2020, it was about a little bit over 1%. It skyrocketed during the Biden administration. We let all these illegal immigrants into the country and flooded the country with H-1B holders from India. Okay. Look what happens when the Trump administration gets in and shuts it off. Why were illegal? First of all, illegal immigrants without permanent residency should not be buying houses in the U.S. using FHA loans. And in my view, not H-1B visa holders shouldn't be either. You should be, if you want to be allowed to come here and work, first of all of these H-1B holders need to be reviewed. Most of them need to be sent back. If you're taking jobs away from U.S. people, I don't want you here. I know that upsets people. I don't care. But you see, this is another example of how your establishment was strip mining. You weren't eligible. All this crying and gnashing of teeth of people on TikTok and on YouTube shorts and all over the internet about the unaffordability. These people were driving up houses because they were getting loans that they, in my view, weren't entitled to. It's supply and demand. We had all this false demand and prices going up because we had a bunch of illegal immigrants and H-1B people getting FHA loans that, in my view, they weren't entitled to. So it gets cut off, and look what's happening. Now, the people that I listen to and talk to, we're going to have another housing crash. And some of the analysts think it's going to be worse than 2008. I don't know that. Again, I don't know the future, but I do hold shares in a company that did very well providing foreclosure services to banks during the last housing crisis. I think it's going to do well again. So we have all of these things happening So I think things are going to change over time, possibly, but we'll have to see. But this is just another example of what was going on that most I didn't know about this. Did you know? Again, we find these things out and they clamp down. And so if people can't buy houses, that's demand that goes away. If people get deported and you have all these apartments, the rents come down. It may not be as simple as that, but that's the general direction. So I think we're going, we're going to see more of this, things shifting. We'll see what happens if these policies yield the results that they should, based on. So if people can't now, if you why is somebody that's not a doesn't belong here, is not a permanent resident, or if it's on some refugee status, why would you qualify for an FHA loan? That's crazy. Anyway, that's it for this week, guys. Again, let me remind you, I'm very bullish on gold long term. It's moved quite a bit in the last year or two. Use caution. If you're running out on Monday, go stand in line to buy gold at recent all-time highs. You may have an opportunity or you may not. Which what I suggest people do is if you actually believe gold is money and you want to be like these central banks, you just accumulate dollar cost average over time. If you look at a chart of gold, pull up a long-term chart, it goes through pullbacks like every asset class. It goes up, it goes down, it pulls back. The general trend can be in even in a general uptrend, you have chances to buy on pullbacks. That's when you should be buying if you're bullish on something. Not, that's what I say. If gold's in a bull market, if uranium's in a bull market, if tech stocks are in a bull market, what have you, you buy on the pullbacks. You don't go out and buy when everybody else is buying because FinTwit has exploded and the algorithm has picked it up as, the FOMO. All right, guys, that's it for this week. We'll talk to you next week. Thank you.